Let's actually get some opinion in and talk to Prasoon Gajri. He's joining us, Chief Investment Officer at HDFC Life. Prasoon, thank you for joining us. You know, we've had some foreign investors tell us that in the light of the impending US slowdown, you know, they will actually do well to go underweight on equities in the second half of the year. What is your reading on where the market is headed from here?
Look, I mean, the fact of the matter remains that over the last 3 months, there has been a complete turnaround in the views of most market participants, starting with the global central banks. From a situation of a number of rate hikes, now there is some talk of US rate cuts in 2020. We have seen easing of policy pretty much across emerging markets. China has eased off clearly, given the slowdown there. India, we have seen an easing of policy which has come through and more likely to come through. So I would not want to really take a call sitting here today what one is likely to do 6 to 9 months down the line. If the situation evolves into something where the recession in the US and the developed markets is imminent, clearly equities will take a beating. But I don't think it's a given that is, there is a probability attached to that, but I don't think it is certain that that is likely to happen. We have seen, so yield curve inversion in the US is a sign but not a definitive argument that recession is likely to come through. So I would play it as it goes along, and from an Indian market perspective, I think proper top-down view is actually looking fairly good. Policy is conducive, earnings cycle has clearly improved. Hopefully, I think the market is pricing in a continuation of the current regime as far as the government is concerned, so really no change in policy tactics. So if that comes through, broadly Indian markets would be sweetly positioned. So from my perspective, I think I'll play it as it goes along, and we'll keep watching the data. If the data suggests that there is likely to be a recession, clearly positioning will need to change.
Okay, just keep your eye on the market. You know, stocks are coming off quite sharply. ICICI Bank is another one. It's moved into the red, and you'll see the bit of that climb down is very, very swift on that one as well. So in line with what we're seeing, but it is Sun Pharma that remains one of the bigger casualties. It's lost about 1% in quick succession. But Prasoon, sorry to keep you waiting. You know, talking about basically the stocks and sectors that look attractive back home, you know, we've been speaking to a lot of these companies over the last few days across, say, FMCG, durables, autos, on, you know, what the recent trends are. And pretty much everybody is pointing towards, you know, slowing of demand. So what's your own reading on which are the sectors that now look good from, say, a growth and valuation perspective?
I think that is the generic view, and there is a reason for that view. But I don't think it is fair to say that the consumption overall across all categories has slowed down. I think there are certain categories which continue to do well. We have seen the jewelry segment in the organized space doing fine, the QSR segment doing okay, staples are by and large doing fine. I think where the hit seems to be come through is largely on the auto side. I think there are a number of extraneous causes for that in our view. Obviously, sentiment does play a part in these cases, but apart from that, the fact that the product prices have gone up both largely on account of regulatory changes and the insurance piece over the last 12-18 months, I think that is important. We have seen an NBFC crisis coming through. The last mile funding on the ground, especially for two-wheelers, has stalled. So I think that has also impacted. And in India, we have seen that consumption slowdown do not tend to last for too long. And also remember the fact that the pay commission bonanza has also kind of fizzled out. So clearly, we have seen some relative slowdown in consumption. I think it could last for a little while, but once it gets into the base, we'll start seeing good consumption again. And also the sentiment could change if the markets do well. And the economy starts recovering. So from my perspective, one, all categories are not really slowing down. And number two, part of it will get repaired as the banking and the NBFC sector start lending on the ground again. And thirdly, the sentiment could improve. And as we absorb these price hikes in some of these categories, I think over the next 3 to 6 months, we could start seeing some signs of consumption bouncing back in categories where it has slowed down. So yes, it's a challenge, but I don't think it's such a big worry.
Okay, so you're saying it's not a big across-the-board worry, but only for some sectors like auto. Prasoon, where would you place your bets? Would it be on exports-oriented sectors like IT, pharma, or domestic ones?
Very clearly, I think we continue to be bullish on domestic stories, be it financials, be it part of the capital goods segment, cement as well. We are pretty positive on all these sectors. We are also positive on some of the utility spaces, which are looking good from a valuation perspective. Specifically on IT and pharma, we are neutral-ish to underweight, and I think that is a stance we have been maintaining for a while. So clearly one would have to watch out, especially for IT, what the growth dynamics in the Western economies really shape out to be. If the growth does not turn out to be as bad as being made out to be at this point of time, I think the IT should do well. If the growth turns out to be really bad, clearly IT will suffer. So from that perspective, I think that sector could be a little bit volatile in the short run. Pharma, I think we believe the sector has overall issues which still need to be resolved. While the price erosion story in US seems to be ebbing off, so hopefully that is something which is behind us, but I think there's a lot of uncertainty around new launches, new product approvals, the regulatory issues. So we'll play it stock by stock rather than a sectoral call. But overall, we are neutral-ish to underweight on that sector as well.
All right, Prasan, thanks very much for joining in, and thanks for your perspective on the market. In fact, we need to focus on the market a little bit because the Sensex is now down 80 points. We saw that fall coming through, and it has come through very, very rapidly. The Nifty has lost 0.25%, and look at that, just Reliance and HDFC alone are at the moment and HDFC Bank are accounting for pretty much the entire set of losses on Nifty at the moment. So together about 28 odd points gone on account of these. And even the might of, say, IndusInd, Yes, SBI, all of them put together is pretty much doing nothing. The advanced decline ratio at this point has worsened extremely. So those lines have crisscrossed yet again for about the second time today. And there are now about 1,100 stocks which are declining on the NSE as against 1,000 which are advancing. But I guess, this could pretty much worsen from here on as well. The big casualties we've been pointing out, Kotak Mahindra Bank, in fact, has seen some incremental losses. So you might want to pull up that one. It's a very sharp, sudden fall over there as well. Bajaj, Fin, Power Grid is another one. Though these are stocks which have a low weightage, but they're all looks like they're coming under, incremental selling pressure right now. The mid-cap index is holding with a gain of just about 0.4%. And you should pull up the Nifty Bank. There as well, we've, the last I checked just a few minutes ago, it was still holding with gains, but it's now back below that 30,000 mark. Look at that. The fall on the downside has been very, very rapid. So now just holding with a 40-point gain on the Nifty Bank. We should pull up the Nifty Bank contribution chart as well and see where, this is coming from. So it's HDFC Bank, ICICI Bank. So they're taking away over 100 points on the Nifty Bank right now, while you'll see that the, maximum of these banks are still trending higher, but they've all come off, and the bigger banks are now pulling the Nifty Bank lower.
I mean, there's no trigger per se, Sumaira, except, the fact that so you had 2 days of severe selling, and you had that big bounce which came through yesterday, essentially erasing the losses completely, especially in the Bank Nifty. So maybe, the correction was severe, but the bounce yesterday was also extremely sharp and one-sided. So maybe some recalibration happening there. But is there a...
Prashant, the Sensex is now down 200 points. It's 0.5% cut. We started with, 0.5% gain?
So yeah, that's what I'm saying. The Nifty, for example, is down 100 points from the time that we started. Because it was up 50, it's down 50 now. It's down 60 actually. So
and
make that 110. Yeah. So there is...
the Nifty Bank is now down 0.25% in just, a matter of 3 minutes?
Yeah, absolutely. 70 points now. So 11,416. We should actually get Ashwini back if he can, and maybe get a quick reaction on this going as well. Is there something out there which we are missing? But it doesn't seem like there is anything to really trigger this kind of a sell-off that we're seeing at this point. Is what's happening in Europe, Sumaira? I mean, anything there? Or because it started higher, about 1/3% higher, right? I mean, most European markets.
Yeah, so I was expecting that. No, so Europe is still holding with slim gains as we speak. So, nothing much that one can report over there. So, I mean, the gains are there, very slim, but they're still there nevertheless. But, our own market, it looks like, and there's a lot of volatility. So now, again, the Nifty Bank is back in the green. Perhaps we should actually try and speak to some dealers to find out, what's going on, if there's, like you said, something that we've just not been able to put our finger on.
Yeah, we'll try and do that, and we'll have Ashwini back on in just a bit. But look at that fall, look at that sharp cut. So, even if you thought about it, just before going into that Prime Minister Modi's address, there was trepidation and general nervousness about what it could be. And then that event passed and the market took off, and it basically went back to the levels it was trading at before the announcement came that there will be an announcement from Prime Minister Modi. So, and from that level, which was basically on the Nifty about 55 points higher, we've lost, so much. So we're down, it's moving very fast. So 36-point cut now on the Nifty. We were down, 60, 70 points, right? So, that dip has been bought into. So this is pretty fast moving out there as we speak. So from being down 70, we're down 35, so all over the place really. The volatility was immense on the Bank Nifty going into that address by the Prime Minister. And since then, over the last, half an hour, actually it's exactly been almost half an hour, only been half an hour, the volatility, if anything, has only picked up. Wild moves, very sharp, very concentrated moves on both sides being seen. So, as you said, across the board, there has been profit taking. What was up is up a lot less now. Yes Bank, IndusInd Bank, Indiabulls Housing. I'm only looking at the Nifty names. Bajaj Auto, Bajaj Finance, Bajaj Finserv. All these stocks have given up quite a bit of gains from when we last looked at them. Ashwini is with us, back with us. Ashwini, what's going on?
Profit booking? See, basically, if you have large rallies, the profit bookings will also look fairly large. So I don't think there is still much to worry about. I think 11,350 thereabouts was the previous low. As long as that holds on, I think there shouldn't be any problem. But things are fairly overextended. We are getting very close to certain events. So, time to be cautious.
But Ashwini, it wasn't large that I think a lot of people got worried about. It was the suddenness or the rapidity with which the market fell in the last 10 minutes.
See, if everybody is long, you would expect the fall to be rapid, because what is this? These are stop losses getting hit. So, the faster the fall, the faster the stop losses get hit, and, faster the market comes off. So I wouldn't be surprised even if some more happens, because, 1,000-point rally, hardly 200-point correction. I think more correction is probably needed and will probably happen by the end of day.
Okay, so essentially everybody's on one side and suddenly there is some profit booking which appears and people run for the exits. That's how Ashwini is explaining the suddenness of the move. And of course, the magnitude as well, how it fell and very, very sharply. Some news at the bottom of your screen. This is from CNN News 18, our sister channel. CBI says service providers aren't cooperating in the Sarda chit fund probe. CBI moves the Supreme Court against Vodafone and Bharti Airtel. I don't think the sector needs any more bad news. The competition has been intense, and some news on this coming through. This will snake its way through the courts, where the CBI has moved the top court now on the matter of the investigations into the Sarda chit fund case. 41 points lower on the Nifty. It was looking like the market is recovering, but it's going back. It did recover quite a bit, but it's down 40 now. We'd sold off to being down almost 70 points on the Nifty. This is, as I said, more than anything else, extremely volatile at this point in time. We'll continue the discussion on the markets, and of course, we'll get Ashwini and others to join in with more perspective. But from Sumaira and me, for now, it's a wrap on Mid Cap Radar. There's more coming up on your stocks in just a bit.